On Business Incorporated today, global food trade increases by 14%, an all-time record high. OPEC revises 2021 global oil demand to 5.7 million barrels per day. And AFDB launches climate change and green growth framework at COP26. Hello and welcome to the program. I'm Chimeze Obi Iwago. We begin the last edition for the week with trading activities from major equities on the African continent. Nigeria's NGX and South Africa's indices traded sideways. The NGX was down 0.16% at intraday, while South Africa's main index gained 0.88%. Egypt's EGX 30 is closed the week's trading on Thursday up by 0.81%, while Nairobi Stock Exchange closed Thursday's session in negative territory. We cross over now to the Middle East, where major equities closed positive for the week on Thursday. The Abu Dhabi and Dubai's indices were up 0.67%, while Dubai's index rose 1.10%. Still within the region, Saudi Arabia and the Qatari indices were also in positive territory, up 0.35% and 0.24% each. In Europe, stocks were muted on Friday morning, continuing to search for direction as global investors assess recent high inflation prints and corporate earnings. Chelsea will tell us more from the European space. Hi, Chelsea. Good afternoon. Well, Germany has overtaken the United States as the world's second biggest electric car market after China. What's driving the surge in e-vehicle adoption there?
Well, the government here has made it very lucrative for electric vehicle buyers. Germany has long had a subsidy for buyers of electric vehicles or plug-in hybrids, but last year they decided to double that, and so now people buying either a purely electric vehicle or a hybrid can get up to 9,000 euros on that vehicle. So that has really helped drive adoption, and we have seen this year alone the number of people taking up that subsidy basically double. The other thing that's really helped the market here is that we're starting to see prices come down for electric vehicles. So in the past, it's been a big barrier for electric vehicle buyers that they typically were significantly more expensive than diesel or gasoline engine cars. But now that we are further along in terms of the energy transition, companies like Volkswagen are releasing 7 to 10 new electric vehicle models every year, and some of those are becoming very affordable. So you can get a new Volkswagen electric vehicle for under 25,000 euros now, including that government subsidy. So all of that has helped to really supercharge the market here in Germany.
And flight traffic at the Frankfurt airport has risen above 2019 levels this week after the U.S. reopened to European visitors. Can we expect this to continue?
So Fraport, which is the company that operates the Frankfurt airport, is sounding pretty optimistic on this. We've seen travel starting to recover, basically starting at the beginning of this summer once it became easier to travel domestically here in Europe. But now that the U.S. has reopened to foreign travelers, that's definitely helped as well. And we've spoken about this, but this transatlantic flight route is extremely important for a lot of European airlines. It's one of their most profitable routes as well. So that has really made a difference. What we've heard from Fraport is that they're expecting now about 25 million passengers this year. That's about 6 million more than the year before, but they are saying to fully recover from the pandemic blow to passenger travel, it's likely going to take up till about 2025. So still a long way off from a full recovery in the air travel market.
And as German coronavirus infections continue to set new records, talks among politicians is turning to the need for more restrictions. What's on the table?
So politicians here are clearly becoming more and more concerned about this rise in infections, which has been setting records all week. Some things are going to change very quickly. For example, starting tomorrow, they will reintroduce free testing for residents. That had been something that was in place but was basically dismantled in October. So people have now had to start paying if they want to get a rapid test. They will make that free, though, starting tomorrow. They're also considering changing some of the rules around who can be indoors, for example, to eat at a restaurant or a bar. A lot of businesses have implemented rules where you either have to be vaccinated or recovered, but now they're discussing whether people also should get a test as well, because as we're seeing, vaccination only provides you so much immunity against the virus, and it does tend to fade. On that note, they also are they're discussing reopening some of these mass vaccination centers so that they can really quickly start to get people these booster shots. One thing they haven't discussed so far is lockdowns. They don't want to introduce a new lockdown, but as we're seeing in other European countries which are also battling fourth waves, for example, in the Netherlands, they are discussing a new lockdown, or in Austria at some point, if the situation gets serious enough, if hospitals start to become overloaded, then all governments may have to consider that option.
Very much, Chelsea. Do enjoy the rest of the weekend. And in the U.S., futures moved slightly higher early Friday morning as Wall Street looked to end the week on a positive note after a historic inflation report. Futures contracts tied to the Dow Jones Industrial Average ticked up 24 points. Those for the S&P 500 and Nasdaq 100 hovered in mildly positive territory. But to bring us up to speed with Thursday's market close, here is our correspondent, Mario Bird.
In comparison to Wednesday, the worst day in over a month. The S&P 500 closed at 0.1% up from Wednesday. The Dow Jones closed 0.4% down from Wednesday, and the Nasdaq closed 0.5% up. It is clear that inflation has had a heavy impact on the U.S. stock market. The labor market reports show the consumer index to be 6.2% increase year over year. This could have a devastating impact on the long-term progress of the U.S. stock market.
And shares in Asia Pacific advanced on Friday as technology shares mostly rose following overnight gains for their counterparts on Wall Street. Hong Kong listed shares of JD.com soared nearly 5% following the single-day online shopping event, while Alibaba dropped 0.67%. But companies set new sales records across their platforms on Singles Day. Hong Kong's Hang Seng Index gained about 0.2% as of its final hour of trading. Mainland Chinese stocks closed higher, with the Shanghai Composite rising 0.18%, while the Shenzhen Composite saw fractionally gains to 14,705 points. Japan's Nikkei 225 gained 1.13%, while the Topix Index rose 1.31%. In South Korea, the Kospi climbed 1.5% on the day. Australian stocks also rose as the S&P ASX 200 closed 0.83% higher. And in London, the FTSE 100 dipped this morning from last night's 20-month high. For intraday market update, let's bring in Juliana now. Good afternoon, Juliana. Well, pharmaceuticals group AstraZeneca was the top faller this morning, down 2.6%, despite laying out a plan to progressively transition its COVID-19 vaccine to modest profitability as new orders are received. What's upsetting investors about AstraZeneca?
Well, I think it's got to do with their profit margin, which has significantly shrunk year to date. They did a full year profit update to investors this morning, which is why their shares were down 5.5%. I think ethically, because there was such a race to get a vaccine at the end of last year or throughout the pandemic. AstraZeneca said that they wouldn't be taking a profit, but it has been denting them selling it at cost. So they have now decided that they are going to have a marginal profit to help them lift up their market capitalisation.
And despite the UK's tight labour market, there are concerns that women who work mostly from home risk seeing their careers suffer. This is according to Bank of England policymaker Catherine Mann. What is Ms. Mann trying to say here?
Well, I think she was pretty clear with what she was saying, that most women haven't returned to the office. Most of them are staying at home. And unfortunately, especially in the big corporate city climate, most of the deals that are done, over the water cooler or in the bar after work. And if you're at home in a kind of a virtual or a hybrid setting, it is more difficult. She's been speaking at a series of, at the first day, which is going to be a series of coffee mornings being run by the FN 100, celebrating 100 senior women in finance. And they've been discussing diversity and gender diversity. That's been a big topic that's become even louder over the past couple of years. And I think Ms. Mann was just making it clear that, yes, of course, the flexibility is great, but not when it disproportionately affects women who are staying at home, who perhaps could have got more senior roles if they decide to come back to the office.
Well, it's the last trading day for the week. Brings us up to speed with market numbers at intraday. And of course, give us an outlook for next week.
Yeah, well, the FTSE All-Share is down at intraday by 0.44%. The FTSE 100 is also down by 0.53%. And the FTSE 250 is down by 0.18%. In the currencies market, the British pound is up against the US dollar by 0.20%, up against the euro by 0.22%, and up against the Japanese yen by 0.15%. Next week, there are a couple of datas. Most importantly is inflation, which is due, I believe, on Tuesday, currently at 3.1%, expecting that to rise perhaps to about 3.4%. And then we're going to be getting unemployment data on Wednesday. Unemployment in this country is currently at 4.5%, and I believe some analysts expect it to remain that way.
All right, thanks, Juliana. We'll look forward to keeping a tab on those data next week. Enjoy the rest of the weekend.
Thank you.
On the global oil market, prices drifted lower on Friday morning, wiping out gains from the previous session as the dollar continued to rise on bets the U.S. Central Bank will bring forward plans to raise rates to tame inflation. U.S. West Texas Intermediate crude futures fell 26 cents to $81.33 a barrel, reversing Thursday's 25-cent gain. Brent crude futures fell 25 cents to $82.62 a barrel, erasing Thursday's gain. Both contracts were poised to end the week roughly unchanged after sharp moves up and down, driven by a soaring dollar and speculation on whether the Biden administration might release oil from the U.S. Strategic Petroleum Reserve to cool prices. The Organization of the Petroleum Exporting Countries on Thursday cut its world oil demand forecast for the fourth quarter by 330,000 barrels per day from last month's forecast as high energy prices kept the recovery from COVID-19. And the metal market, gold traded flat on Friday morning, but was set for its biggest weekly jump in 6 months as high U.S. consumer prices drove interest in the metal as an inflation hedge. Spot gold was steady at $1,860.81 per ounce after leaping to a 5-month peak on Wednesday. U.S. gold futures edged down 0.1% to $1,862.20. The metal is on track for its biggest weekly gain since May 7, rising 2.3% so far. Inflation pushed more broadly through the economy in October, again challenging the Federal Reserve's outlook for only transitory price increases, offsetting recent wage hikes in a blow to consumers. Spot silver rose 0.1% to $25.25 per ounce and was en route to its best week in 3. Platinum was little changed at $1,085.52 and was on course for its biggest weekly rise in a month. Palladium rose 0.2% to $2,063.60. And after the break, AFDB launches its climate change and green growth framework. This and more after the break. The UN Food and Agriculture Organization says global food trade should hit an all-time record high in both volume and value terms by the end of 2021. The global food import bill should extend beyond $1.75 trillion, marking a 14% increase from 2020 and 12% higher than the previous forecast. According to the FAO's new food outlook, trade in foodstuffs had shown remarkable resilience to disruptions throughout the pandemic, but rapidly rising prices posed significant challenges for poorer countries and consumers. The increase is driven by higher price levels of internationally traded food commodities and a threefold increase in freight costs. Developing regions account for 40% of the total, and their food import bill is expected to rise by 20% compared to the year before. And the African Development Bank Group has launched its Climate Change and Green Growth Framework, the first of its kind by any multilateral development bank at the COP26 Climate Conference in Glasgow, Scotland. Speaking at the Africa Day celebrations at the Africa Pavilion, AFDB Climate and Green Growth Division Officer in charge and manager said the framework strengthens the AFDB's ambition and vision to address climate change and promote green growth, building on over a decade of targeted efforts and lessons learned. He noted that the framework was grounded in African realities. He added that the strategic framework would enable the AFDB to strengthen its existing momentum on climate change action and also build on the ambitious goals that it has already established, including the goal of mobilizing $25 billion and allocating at least 40% of its yearly investment as climate finance. Now, oil and gas continues to play a critical role in the development of the African continent, with many resource-rich countries looking to expand exploration and accelerate production across multiple sectors. Africa is rapidly becoming a global competitor, capturing the attention of international sector investors and stakeholders. Africa Energy Week 2021, which kicked off in Cape Town this week, seeks to unite African energy stakeholders, drive industry growth and development, and promote Africa as the destination for African-focused events and for the future of Africa's energy sector. Let's bring in our correspondent in South Africa, Brian Pugeni, to bring us up to speed with that and other developments in South Africa this week. Hey, Brian, good afternoon. Good to see you.
Good afternoon. Thank you for having me.
So the African Energy Week ends today, and I'm sure you must have been following proceedings there. What for you are the major takeaways?
Well, yes, the Africa Energy Week has been happening since Monday. We've seen most of the countries in agreement that Africa should be the hub of energy, that Africa shouldn't be really struggling with energy at the moment, because most countries in Africa have been struggling with energy, not just oil, but even going to the electricity issues we saw in the past week in Zambia, which Zambia is one of the key contributors of electricity to the southern African region, the Cabora Bassa. One of their power stations tripped, and that caused a major blackout in Zambia, Zimbabwe, and South Africa. So it's been a good week, though it's been marred as well by anti-climate protests outside the conference itself, which was very ironic. But some of the speakers really welcoming the anti-climate protesters and saying, yes, they agree with them. Africa needs to move to greener energy and reduce gas emissions.
Yeah. Now, this is also coming at a time the discussion on energy transition are ongoing in Glasgow, where 5 African leaders highlighted the need for developed nations to fulfill their climate financing promises to Africa. How much of the transition to cleaner energy is re-echoed at this summit in Cape Town?
Well, a lot of the countries are agreeing with greener energy and the transition to greener energy, though there are still some who are skeptical about it, saying that countries will lose a lot of revenue if they transition. There's a lot of money which is needed to be pumped in for infrastructural development in greener energy, and they're saying they can't just switch in a space of little time. They're asking these so-called bigger nations to give them time to transition. But we saw South Africa itself getting a funding of 131 billion rand, which is good for the economy, since we've seen struggles in the energy sector in the country. So that will be South Africa being one of the first countries which will pioneer the change. And most of the countries saying if South Africa can manage to do that, they will also follow suit.
And this event is also happening at a time Eskom embarked on load shedding. However, Eskom says load shedding will be suspended from 5 a.m. That's this Friday, today. So bring us up to speed with that. What's the current situation with that?
Well, it's been a week of darkness from last weekend. We started on stage 2 load shedding, then to stage 4, where we saw load shedding taking place 3 times a day. We're in 2-hour intervals. Then we moved to stage 3 on Wednesday. They've currently suspended load shedding today in the morning, but they're saying it could be short notice as well. We could go back to load shedding anytime. So we're still seeing Eskom struggling with the power supply in the country. On Wednesday, the Eskom CEO briefed the media saying that it's not just going to go away. Load shedding is here to stay. So we are going to see how it's going to go in the next coming days, but there's no light at the moment at the end of the tunnel.
All right. In the meantime, the Intra-African Trade Fair 2021 kicks off in Durban next week. How prepared is South Africa to host this event?
Well, it's all systems go in Durban from Monday. Registrations have been taking place online. We're expecting to see delegates coming in over the weekend. The Durban International Convention Center is where the conference will be held. We're expecting to see over 1,000 exhibitors. We're expecting to see innovative measures, innovative exhibitors. So it's all systems go. We're going to be checking that out next week. We're going to see how it's going to go. Hopefully, we'll get to talk to some of the big industry key players and find out how they're planning for the future.
All right, thank you very much, Brian, for your time. In the meantime, South Africa's finance minister has announced the country's midterm budget policy statement, reporting better than expected finances for South Africa. The minister says even though the economy grew faster than expected in the first half of 2021, output is expected to return to pre-pandemic levels in 2022. This is largely the result of global demand, higher commodity prices, and the easing of COVID-19 lockdown restrictions.
The medium-term budget policy statement charts a course that demonstrates government's unflinching commitment to fiscal sustainability, enabling long-term growth by narrowing the budget deficit and stabilizing the debt. We now expect the South African economy to grow by 5.1% in 2021, from a 6.4% contraction in 2024. Over the next 3 years, the growth of the local economy is expected to average 1.7%. reflecting some structural weaknesses such as inadequate electricity supply. Our first and immediate task in this regard must be to ensure stable energy supply, reduce the risk of load shedding, and accelerate the transition to renewable energy sources. The second set of reforms must continue to focus on about improving the efficiency of South Africa's logistic framework to support economic growth.
And with that, we draw the curtain on today's edition of the program. And of course, for the week, thank you for watching. I'm Chimeze Obi Iwagu.